Have you ever noticed how every other indicator these days claims to be AI-powered? Yeah, you see that label everywhere. But when you dig deeper, most of them are just regular tools with fancy names. So in this video, I'm going to break down 5 of these so-called AI indicators on TradingView, explain how they actually work, and show you how to use them properly in real trading without the hype. Let's get started. The first one is the AI engulfing candle indicator. It's basically a mix between the engulfing candle pattern and the relative strength index, or RSI. The idea is simple. It combines price action with momentum. You'll get a bullish signal when a candle closes above the previous candle's open while RSI is in, or has recently been in, oversold territory, below the 30 level. That's where you'll see a small green triangle pop up below the candles. On the flip side, a bearish signal appears when a candle closes below the previous candle's open and RSI is overbought above 70. That prints a red triangle above the candle. It's all based on a 14-period RSI and simple candle math, nothing fancy or AI related. The system follows fixed rules, so identical inputs will always give the same outputs, but it still works well as a basic setup. To make it more accurate, you can add a 200-period moving average as a trend filter. I'm sure all of you know how to add a 200 EMA to the trading chart. That means only take the green buy signals when price is above the moving average and only take the red sell signals when it's below. Place your stop loss and target about 1.5 to 2 times your risk. If you also get a volume spike or RSI crosses back out of overbought or oversold, that gives you extra confirmation. Now let's move on to the next indicator. Next up is something that actually does use machine learning, the AI trend navigator. This one is built around a simple K nearest neighbors algorithm, or KNN for short. It sounds complicated, but in plain English, it just compares the most recent price movements to similar patterns in the past and tries to guess where the trend might go next. It's not real artificial intelligence. It doesn't learn or train over time, but it's still an adaptive model. It gives you 2 key lines: the main KNN classifier line and the average KNN line. You'll see color changes on your chart: green for uptrend, red for downtrend, and orange for neutral periods. It's pretty easy to use. When the line turns green and price is above the average KNN classifier line, that's your buy setup. When it turns red and price is below the NEN classifier line, that's your sell setup. If you add RSI or MACD as a confirmation tool, it filters out the weak signals nicely.
Don't rush on every color flip. Wait for at least 2 candles to confirm the new color direction, and always trade in line with the higher time frame trend. That filter alone removes most fake reversals.
Now let's move to the next indicator.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
The name of the next indicator is AI Supertrend Clustering Oscillator. The name sounds crazy, but the logic is simple. It combines the supertrend indicator with a clustering algorithm called K-means.
What it does is calculate several supertrend lines using different ATR multipliers, like 1 to 5, then groups them together based on similarity. That clustering helps identify when multiple supertrend signals are agreeing with each other. On your chart, you'll see a color-shaded oscillator. Blue tones mean bullish momentum, red tones mean bearish momentum, and the darker the color, the stronger the signal. It looks impressive, and it actually works decently for trend continuation trades. You can use it like this. When the oscillator is dark blue and price is above a 100 EMA, look for buy trades. When it's dark red and a price is below the EMA, look for sell trades. Wait for a small pullback into structure or support resistance before entering, then set your stop above or below the recent swing and target 1.5 to 2 times your risk. Even though this one uses a clustering algorithm, it's not a deep learning model. It just groups similar data points, so think of it as a statistical version of supertrend rather than real AI. Use this one to catch continuation moves, not fresh reversals. When the oscillator turns dark blue after a small pullback, that's your sweet spot.
Our next one is the AI breakout indicator. This one claims to detect breakouts using artificial intelligence, but it's purely technical. It measures the highest high and lowest low over a set look-back period to identify potential breakout levels, then uses adaptive moving averages to confirm the breakout direction. It also includes pivot high and low detection for extra confirmation. Despite the AI label, everything here is rule-based. No neural networks or adaptive learning at all, but it's still a solid breakout tool if used correctly. You can take buy trades when price breaks above resistance and stays above the adaptive moving average, and sell trades when price breaks below support and remains below it. The adaptive MA works as a filter to keep you trading in line with the trend. Place your stop loss just outside the breakout zone and target about 1.5 or 2 times your risk. It's not AI, but it's an effective breakout system for traders who prefer structured setups. Now let's move on to the last and final indicator we will be discussing in this video. We have the Adaptive Money Flow Index with K-means clustering. This one. It is marketed as an AI-powered MFI, but again, it's really just statistical adaptation. It uses the same MFI calculation as the standard version, but automatically adjusts the overbought and oversold zones using clustering instead of fixed levels. Basically, it analyzes the last few hundred bars of data and shifts the threshold levels based on recent market volatility. That's what makes it adaptive. It also plots triangle markers, green for bullish reversals, red for bearish one, and shows plus, 0, or minus symbols to indicate market bias. You can build a strong trading strategy around it using trend filters. For example, for a buy setup, wait for price to be above the 200 EMA and the indicator to switch from neutral to plus. Enter when you see a green bullish triangle appear. For a sell setup, look for price below the 200 EMA and the indicator switching from neutral to minus, then take the red triangle signal. The stops go just beyond the recent swing, and you can exit when the bias flips back to neutral or when an opposite triangle appears. It's not AI in the true sense, but it's a much smarter version of the traditional MFI that adapts with the market instead of staying static. So, after going through all these so-called AI indicators, the truth is, most of them aren't really artificial intelligence. They're smartly coded traditional tools with small adaptive or statistical elements. But that doesn't mean they're useless. If used correctly, each one can give you clean entries, better timing, and more context in your trades. Just remember, no indicator is magical. The real skill is in how you combine them with your own strategy, price action, and risk management. Let me know in the comments which one of these you'd actually trust on your chart. Make sure to subscribe to my channel and like the video for more such video like these. Thanks for watching the video till the end. I'll see you guys in the next video.